when I get in casual conversations with people and they say, hey, why do you like uranium? Here's exactly what I tell them, especially for US-based investors. The United States relies on nuclear for roughly 20% of its baseload power. And baseload power, that's like the first 20%. It's not just 20%, it's the first 20%. And we import practically 100% of that uranium that we use to power 20% of our grid. And we've got uranium mines here. We've got quality companies. The price just isn't high enough to incentivize them to produce. So right there, I mean, those are just simple facts that you could explain to a kid and they would understand it. It's really that simple.
Hey everybody, this is Rob Kientz of goldsilverpros.com, and it is my absolute pleasure to have two returning guests back on the program. One is Steve Mueller, who goes by the Dissident Dentist. How are you doing, Steve?
I'm doing really well.
And we have another Steve here. This is Steve Penny, who runs Silver Chartist, probably the best charting service on the internet, especially with respect to the precious metals. Mr. Penny, how are you doing today?
I'm doing well. Good to be talking with you guys and looking forward to a good conversation.
Yeah, so I invited you guys on. We've been wanting to do this for a long time. You know, schedules always are a challenge, but glad to have you guys on. We're recording this, by the way. I'm going to date it May 11th, 2022, about 7 p.m. So depending on when this comes out, you know, if we mention prices, they could be slightly off. But for all intents and purposes, what we wanted to do this for was to address the uranium market. And I wanted to do a roundtable because I think uranium is in a bull market. But the question is, with the most recent pullback and some other things going on geopolitically, is the uranium bull market dead? That's the question that we want to answer. So I'm going to start off with you, Mr. Mueller. What is your opinion on that? Is the uranium bull market dead? Is it over?
Man, it sure feels comatose, at least, doesn't it? It's a pretty terrible sense of it. There was two things last year that I thought could slow us down. One was a nuclear incident. The second thing was like more earthquakes in Japan, and the third thing was some sort of broad equities crash. We have now faced all three of those in the last 60 days, and we're still here. You know, we're down quite a bit. We're coming up on support levels and crashing through them. So I'm not catching a falling knife here too big, but no, we haven't incentivized new production. The baseline cost of production keeps going up. Which is probably about $85 now, maybe 90 in some parts of Africa. So no, the bull market's got a lot of years left. But the volatility is shaking people out.
Oh yeah. What about you, Mr. Penny? What's your thoughts on the uranium market?
Yeah, I spent some time on Twitter today, so I actually sold all my uranium and put those funds into the ARK fund. I'm just kidding. No, so I like to say fundamentals tell me what to buy, technicals tell me when to buy or when to sell. So fundamentals and technicals. The fundamental story, I like to say with uranium, the more research I do into the uranium sector, the more bullish I become. That's just what happens because there's just so many bullish fundamentals. None of them have changed. In fact, they've all only accelerated. So the fundamental story has not changed. There has been some technical damage inflicted, but if you look at most of the charts, we're still in an uptrend. So an uptrend is higher highs, higher lows. We haven't quite made lower lows yet. So we're still in an uptrend. I mean, we're hanging by a thread there on a lot of these stocks. But even if that uptrend were to break down, that would just indicate to me that perhaps we need a little bit more time to carve out a base to repair that technical damage. But really, this is of no concern to me as far as the big picture. Are we in a bull market or not?
Yeah, so let's look at your technical charts and tell me where to go here. Are you guys seeing it? Yeah, I think you are. So we've got Kamiko, we've got uranium futures, and we've got Sprott. Where should I go in terms of talking about what you were just mentioning?
Sure, we can start right there with the chart. So this is the uranium futures, so the metal itself. And you can see that this is a big picture chart. It goes all the way back to 2006. So the spot price bottomed in 2016, just below $20. And then we began to rise in this steady uptrend channel. And then we last year broke out above that uptrend channel and almost went parabolic. I mean, we went really quick up to $63. And you can still see on that RSI at the very top of that chart, we are still a bit overbought. That's a monthly chart. So I wouldn't be surprised to see some backing and filling here. But from a technical perspective, the spot price of uranium is just, that's a very bullish looking chart. And I think we just need to consolidate here for a little bit. And $73 is the next chart-based target for the spot price itself.
Okay, and let's talk about fundamentals for a second. I'm going to stop sharing on that, and we'll get back to some of your charts, Steve. And by the way, thank you for doing those.
Sure.
Both Steves have provided us background material, which we'll get to during the presentation when we talk about it. To me, when I talk to people, I talk to executives, and I just was at the Chicago Strategic Investment Insights Conference, SIC, in Chicago, where I was presenting, and one of the CEOs of uranium companies there, and one of the roundtables we're talking about energy. We're talking about clean energy and how uranium fits into that. And he was like, the price really in the United States to get a lot of these guys to produce in the U.S. is about $80 at least, maybe $100 to entice them to do it. And the United States uses 50 million pounds a year. We import almost all of it. We have almost zero domestic production. And so if we want to have any independence in the uranium market and security of supply, the price is going to have to go to 80 at least. Now, in terms of, I'll ask this of you, Mr. Mueller, in terms of where the world price goes, do we just have a higher price of uranium here domestically, or do you think that there's a reason for uranium to stick at $80 around the world?
There's a lot of reasons for the price to go up. Even the lowest and best miners like Cigar Lake and McArthur in Canada, super high grade, infrastructure is already there. They're saying their cost is now above $60. Kazakhstan, with all the trouble they've had, and we'll touch on this later, they're having more trouble. I think their cost is probably more than doubled. It was, down at 20, and I think it's probably tripled as well. So it might be close to 60 as well. And the Africans, like I said, they're probably close to 90 just to break even. The Americans are at 80, 82 to break even. So yeah, I mean, it's going to have to get higher than that for several quarters in order to get financing. So we've got a long ways to go. Long ways to go.
So, okay. I kind of agree with you there. I think fundamentally, Mr. Penny, back to you. It looks bullish, but could there be uranium pullback from a technical perspective? Because everything in the market is dumping right now. Everybody's panicking, hence your reference to Twitter before. The screaming meter in terms of everybody panicking, from Bitcoiners to stockholders. The only thing that actually moved positively were bonds, because a lot of the issuances fell below 3%. That was actually positive. Everything else is getting monkey hammered. Do you think that uranium could pull back maybe into the 40 range again?
I would think that's highly unlikely, but anything is possible. I deal in probabilities, not predictions. I think that's a low probability outcome for it to pull back that far. I mean, we're up at 63, so a pullback to 40, that would be quite the pullback. But the immediate support is $50.80 and down to about $50. There's a big gap in the charts there. I'm expecting, my baseline expectation is for $50 to hold. But the bottom line is, from a fundamental perspective, the world we need a higher uranium price to incentivize that new production. The world needs more uranium, and the price is too low to incentivize that production. Whether that incentive price is, $80 or $90 or $100, regardless, it's significantly higher than where it is now.
So let's marry the technical argument with the fundamental argument I just made, specifically for the U.S. So on your chart, I see support and resistance lines at 63.85, 73, 95. If we need it $80 in the U.S., we're probably one of the largest consumers of uranium around the world, I would imagine. We have very little currently producing domestic supply. Can we technically, how hard is it to get to that price, the 80 range, 80 to 90 range?
There's really not much resistance. Once you break out above that previous high that we just made a couple months ago, that 63.85 high, the next resistance there is 73, and that's not really even that meaningful of a resistance from a technical perspective. After 73, you have 95. So, I mean, and uranium bull markets, when they go, they go fast. Things happen fast. And yes, it's overbought technically, but it can stay that way for a while. That's not like a signal that we're due for a sharp pullback. It's just something to watch, that it's worthy of note. That's all.
And when we're saying overbought, we're not talking from a physical demand perspective. We're talking about from a charting perspective, where you have certain, technical indicators that tell you, oh, people have, overbought it, is due for a correction, to allow those technical indicators to realign, right?
Yes, exactly. And, a lot of people, technical analysis does have some predictive benefits, but that's not the main reason I use technical analysis. I use it because it allows me to manage risk. And a lot of people say, hey, I like to buy pullbacks. Well, what's your pullback target? I use charts to identify those pullback targets. So I think more important than predicting the short-term outcome here is having strategy. Not many people have one, or a lot of people don't. Is your strategy to buy pullbacks to support? If so, execute your strategy. Is it to buy breakouts? That's fine. Is it to dollar cost average? The important thing is to have a strategy, and that way, you're equipped to handle a variety of different outcomes, and you're not as emotionally charged when things happen.
And strategy matters, and technical analysis matters because the big guys use it, and the big guys are the ones that come into the market and do, they're the market makers. So the market maker's doing it and you're investing. You want to know what the market makers are most likely looking at. And you can't always tell what their targets are going to be, but a lot of times it's pretty obvious when you look at a chart. You know what the major support and resistance lines are. You know what the 250-day moving averages are. If you marry that with some fundamental understanding of the market, then you can set your own price targets and be happy with them. Otherwise, if you're buying in the dark. It's a shot in the dark and you don't know how you're going to do.
Exactly.
And that's not really what professional investors want to do. And that's why people follow your service, Steve, is because they need to know that information. And that's why it has value, is because everybody does that same thing. So getting back to you, Mr. Mueller, I know that you are very well connected in the space. You talk to a lot of people and you provided us some information on the market. I'm just going to put this up on screen. Walk us through what we're seeing here and what we need to pay attention to.
Sprott took over the uranium mining ETF from North Shore and Tim Bertello, and they've been marketing the heck out of it. I used to get an email from them once a month, a phone call once every 6 months, and I'm getting a phone call probably every 2 weeks, and I'm getting 2 emails a day on average from Sprott, either as a financial advisor through the Sprott Global or Sprott Capital or client or whatever. So they are marketing, and they're going on CNBC and Bloomberg Business, and they've got it turned on. They're meeting with a lot of big money and selling this as an energy metal, as energy security, the security apply, and really the only way to stay green. They're getting a lot of buy-in, or they're just a lot of their big clients, the multi-billion-dollar clients, are just waiting on a little liquidity.
Okay. So Sprott, I heard, wasn't able to get their listing on the NYSE, the big NYSE. Do you think that's going to affect their ETF?
No. I think if anything, they'll get more aggressive.
Okay.
Yeah. It would have been really nice to have options and being able to let, kind of the Robin Hood crowd being able to, to get into it. But, there was, the SEC wasn't going to go for a physical trust that was closed in with no physical redemption. So it was a nice dream, but, it wasn't central to the thesis at all. So.
Yeah, and I think we've already talked about fundamentals, but this chart you have from Kamiko basically highlights it. I mean, the only way to get reliable baseload power across the world is uranium. We all know that. There's nothing else at this point in time. The technology doesn't exist for thorium or other things. It's just not there. Not enough hydroelectric, even though hydroelectric is probably the best. Not enough geothermal. Geothermal is great. Wind and solar, not reliable. So it's going to have to be uranium.
Yep.
Talk to us about Russia and their capacity. This comes into play because of all the sanctions.
Yeah, so they don't produce that much uranium. They produce enough for themselves, and really that's about it. But their enrichment, they're at least 39% directly, and indirectly they're a little bit more. They're closer to 50. So once the sanctions, they're unofficially in place already. And Kamiko said straight up, like, there is panic in the enrichment market. And we saw the measures for that, the 𝙂𝙊, and it went up. I want to say like it was at least 53, maybe 60-something% inside a week. Utilities are panicking, and that's the first domino to fall. And we're going to see it hit conversion, and then we're going to see it hit yellow cake, and so it's just a matter of months. It's going to happen this year. And Kamiko's already buying because they'd rather buy here at 50 than they would higher, because they can't even make it for 50. So
yeah. So talk to me about this one. This is an excerpt from what that you pulled for us?
The Kamiko quarterly earnings call on Cinco de Mayo, and it was wildly bullish. And that's kind of when some of the general broad market started to get pretty weak, and so it went nowhere. Their stock price just plummeted, as Steve will show us in a minute. But the fundamentals are crazy. Kamiko is well positioned because they're one of the few Western converters at Port Hope. And so, as far as a company, they're really strong. They've got, more than $1 billion in cash. They've got infrastructure. They have tier 1 assets. They were bragging about that to themselves, there for an hour. But to me, the most interesting thing on the call, and I've not heard this discussed widely, and I think it bears more discussion, is all the people that called in weren't people that had called in a year ago. Previously, we had uranium-only experts call in, and usually it was just 3 of them. This time we had crypto guys, we had contrarians, we had Canadian oil gas guys. We had some really big names from big banks, Bank of America, Goldman Sachs. A bunch of these guys that never took an interest in this asset are now interested, and were listening to the quarterly calls and called in and asked questions they're really intelligent. So to me, that was the most bullish thing about the call, was not actually the enrichment market panicking, but was that there's some serious money finishing up their due diligence and getting ready to jump in. So I'm excited about that.
Okay. And up on the screen, we have something you said came out
today. Yeah, about an hour ago now. So there's kind of some growing tension. The Kazakhs, I think, feel a little more alignment with Ukraine than they do Russia, and they're kind of scared. Yeah, I mean, they appreciate Russia helping them out lately, and they want to be friendly with Russia, but they don't want to go to war with Ukraine either. And so they want to be a cooperative, but they don't want to be aggressive or expansionist. They suffered under Stalin for a long time. I don't think they want to join any security operations in another country. That's just creating a lot of tension for them. So I don't know which way the cookie's going to crumble, but I feel bad. I feel bad for them.
So what does that actually mean for worldwide supply? Could that affect it? That relationship with Russia?
It already is, because they've not been able to ship, because normally they ship to St. Petersburg and then out. And they're trying to find other ways, but I mean, they haven't been able to find a way to ship their uranium out because they can't get insurance on the shipping. So it's right now they're stuck. They've got a bunch of uranium. They're having trouble getting supplies to mine more of it, actually. So I think their production is going to fall over the next 2 years quite a bit. But in the meantime, they can't sell what they have very well because they can't ship it. So.
Yeah, that shipping is a big thing. I was reading in probably in Zero Hedge, but it's sourced from somewhere else. There was an analysis of, or maybe I read about it mainstream. It might have been CNBC. I read so much I forget. They were talking about how much Russia could ship through China, either to China or through China through the rest of the Belt and Road Initiative. And the problem is they literally have maxed out all of their port and rail capacity to China. They cannot get any more. The only other way is to go west. Mm-hmm. They'd have to ship it around the tip, the southern tip of Africa, because you can't go through the Suez Canal. That's not going to be allowed. Mm-hmm. So unless they can get their Siberian route finished, which is a brutal route that they're building as part of the Belt and Road Initiative, by the way, it's not finished. Russia has a problem exporting a lot of its stuff. So logistically and physically, yeah, Russia could sell more to the rest of the world that will buy it, but they're overloaded in terms of their exports can go. Mm-hmm. And this is a problem that they're having right now. If they can't get Europe on their side and they can't push stuff out through Europe, then they're in trouble in terms of their ability to export commodities and pay for things. Yeah. And what that also means, if you look at it from a different perspective, if you just, irrespective of the merits of each political party here involved, what does that do to the rest of the world if they can't get their commodities out? Because Russia has a lot of commodities, and it's not just nuclear that could be affected, it's all the commodities that they have. If they can't get them out because of these sanctions, I mean, what does that do for commodity prices in general, including uranium?
I think the bifurcated market, some people are starting to call it, just bipolar, kind of like the Cold War, undoes a lot of the globalization and a lot of the efficiencies we've had, and it brings prices way up. And it makes inflation just a whole nother level of structural. The Federal Reserve's trying to destroy demand, but they can't build supply. They can't print supply. I don't know how it ends. I will give a bit of financial advice. This is financial advice. Do stack all the food you can for your family for the next 6 months.
Right. No kidding. That's serious advice. Listen to all the preppers that for 10 years have been telling us to do this.
Yeah. We just did that ourselves. I mean, we did that anyway, but I was looking at, not to get off on a tangent, but I was looking at, some of these freeze dried foods and things like that. And they're so expensive, especially if you have a family of 5, like I do. It's like thousands of dollars.
Oh yeah.
So we just went and bought 2 extra freezers for the garage, stuffed those, and then actually got a portable solar generator to power it in a worst case scenario. But anyway, all of that was actually cheaper than the freeze dried stuff. So I'm not sure why I mentioned that. It's not really relevant to uranium, but just thought I'd mention that.
No.
We're talking about commodities, and food is definitely a commodity, and food's being affected for sure. I think Biden talked about that yesterday in his speech with regards to the wheat that can't come out of Ukraine. And I also read in Texas that they're expecting maybe 50% less wheat production this year because of the heat wave we're going through. So for those that don't know, we're at high 90 temperatures in Texas and almost 100 in Oklahoma, where a lot of agriculture comes from. And it's about a month to a month and a half early for those kind of temperatures. And farmers, it's going to reduce yield, farmers think. So there's going to be a crunch on corn and wheat and things like that, probably here in the U.S., just because of other factors. So getting back to uranium, I had the Kamiko chart up there. Let me put it back up there, Steve. It looks like it's fallen through support. Should we be concerned here?
Yeah, and I shared that chart for a couple of reasons. One, there's that very clear uptrend channel, and we lost that. That just happened. So that's, it's a breakdown of the uptrend in Kamiko. Let me look at my daily chart over here. The previous low was in January of this year, and that was down around 18, and currently we're, right around 20. So you don't want to see a lower low. That would be the next thing that you don't want to see. And I kind of shared that chart too, because I was telling Steve the other day, we spoke offline, and there was this bearish descending wedge on the Kamiko chart. And I kind of highlighted it a little bit to the members and on Twitter even, but I kind of wish, I made a bigger deal about that, because it was pretty clear, a pretty clear bearish pattern that I wish I had paid more attention to.
Well, that's the thing about technical analysis. Sometimes you can see a pattern and it doesn't come to fruition, and sometimes it does.
Yeah, that's true. Yeah. And it allows you to manage risk.
It's not 100% science. Yeah. Yeah,
100%. But one thing about, I like to say, price and volume often precede the news. So you can kind of see, often when you get bullish news, it's already priced in, and a sell-off happens, and then you get the news after. Technical analysis can kind of forewarn of caution signals ahead of time, and that was there, and I wish I kind of emphasized that a little bit more.
Fair enough. So here we've got URNM, Sprott Uranium Miners ETF. It looks like it's broken support as well. If I'm taking that green line and kind of, extending it to your resistance red line there, it looks like we've broken down through support. Yeah,
for anyone looking at who wants to know the exact tick, back in January, the low was $59.30 on URNM. So you want to see that support hold. We're pretty much right there now. We're just above 60. So 59.30, if that were to fail, that's a lower low. And now if you go up and make a lower high, now you're in a downtrend. So we don't want to see that. Unless you're looking to accumulate. It's all about perspective. If you're just building out your portfolio and you've got, 2+ year time horizon, I would love to see a downtrend. But if you're all in, you probably don't want to see that. So it's all about perspective. If you have cash available, I welcome these pullbacks. You guys probably remember, I'm sure everyone remembers back in March of 2020, that sharp sell-off. that was the most profitable time for me to ever accumulate shares, when there was just panic in the streets, and we could be setting up for something like that again. And I'm not afraid of that. In fact, I welcome that personally. The reason I hate to see those things is because they hurt. Wild moves hurt the maximum amount of retail investors, because they sell at the exact wrong times and buy at the wrong times. But for people who kind of have some experience, this is opportunity.
Yeah, volatility is not the retail investor's friend, because most retail investors get influenced by emotion and get influenced by the Twitterverse, what I call the screamometer. Mm-hmm. So as the screamometer ratchets up, people freak out and they start selling everything, that's not bolted down. Mm-hmm. And that's never a good strategy in a buy and hold, because every market, even bull markets, have pullbacks, and sometimes they have pretty big ones. Mm-hmm. My question is, why is it that people will stick in the general stock market forever? Is it just because they have 401ks and pensions? But they'll get rid of everything else. Gold, silver, uranium, commodities. It's like people look at commodities, and if they see a pullback, they freak. Mm-hmm. But they'll stay in Tesla forever, right? Why is that? Why is that? The psychology.
I think on Wall Street and with managed money, most people, take the advice of these big institutions. And mm-hmm. there's kind of a mantra in those inner circles, like it's okay to be wrong as long as everyone else is wrong too. Mm-hmm. So it's obviously that's not okay for us, but I think they kind of take comfort in that. Hey, well, we're all losing money. We can't all be wrong here. So if everyone's doing the same thing, it's like a feedback loop that reinforces itself until it doesn't anymore. Obviously that's not going to go on forever.
Okay. So to clarify for everybody, we opened up by saying, is the uranium bull market dead? I think we're saying it's probably not, but could you guys give your 1 minute elevator pitch on why not?
You want to go first, Steve?
Or just that, the Federal Reserve can't print supply, and the world, mm-hmm. Is not going to allow their grids to fail. And they're talking about how they're willing to pay more for energy security and to get it from a country that likes them. So that means that prices are probably going to triple for the uranium commodity itself. And I think we probably see, in year and a half or two, probably URNM of 300. So yeah, not dead, but we're a little bloody.
Yeah, and I'll go ahead and share when I get in casual conversations with people and they say, hey, why do you like uranium? Here's exactly what I tell them, especially for US-based investors. The United States relies on nuclear for roughly 20% of its baseload power. And baseload power, that's like the first 20%. It's not just 20%, it's the first 20%. And we import practically 100% of that uranium that we use to power 20% of our grid. And we've got uranium mines here. We've got quality companies. The price just isn't high enough to incentivize them to produce. So right there, those are just simple facts that you could explain to a kid and they would understand it. It's really that simple. The price has to go up. We need uranium. It's 20% of our power grid and the price is too low. So those are the facts, and that's not changing anytime soon. And it's hard to imagine anything that would change that. So that gives you kind of the conviction to ride out, to not lose any sleep over these sharp pullbacks.
Okay. Well, I think we answered the question. I'm going to go ahead and stop it here because we're almost at 30 minutes, but I do think we need to come back and talk uranium again as we have more time. So let's do that. And I'll go ahead and thank everybody for the time. Appreciate you guys for hopping on, and we will take this up again in the next few weeks. Thank you, guys.
Thanks, Rob. Appreciate it. Thanks, Steve. Always good to talk with you guys.
Thanks, Rob. Good to see you.